Hello, welcome to Newscenter. I'm Parikshit Luthra. The collapse of three major US banks, including the Silicon Valley Bank, rocked the global banking system and led to a massive sell-off in stock markets in the last 2 weeks. The crisis also pushed Swiss banking major Credit Suisse towards the brink of collapse, where it was rescued at the last minute by UBS. Now, despite the turmoil, the US Federal Reserve raised the repo rate by 25 basis points, marking its ninth hike since March 2022. Now, how will all these developments impact the Indian banking sector, the Indian economy and the world economy? We're joined by former Deputy Governor of the RBI, Mr. Rakesh Mohan. Mr. Mohan, thank you very much for joining us. Let's begin with the Fed hike, 25 basis point hike. How will this impact the RBI's decision-making? What do you expect the RBI to do now?
First, it's very difficult for me now that I've been out of the RBI for almost 15 years, 14 years, to predict what they would do. I think I can say something innocuous, that is, they will do whatever they have to do. So, but more seriously, I think that the RBI has not really been following what the usual Federal Reserve does. It has been doing whatever actions it takes on the advice of the Monetary Policy Committee, depending on our own Indian data. So I wouldn't at all like to predict what they would do, but I don't think that they should be affected significantly what the US, the UK, and ECB have done in the last 1 week or so. Remember that the inflation rate in the UK is over 10% and very, very far from their target of 2%. The euro area inflation rate is over 8%. Once again, very far from their 2% inflation target. And third, of course, the United States as well, the inflation rate remains at 6%, although it has been slowing down. Once again, very far from 2%. The unemployment rate has not gone up despite the 9 increases. So I think that their situation is very different from ours, where our policy rate is now approaching our inflation rate, so that the policy rate will soon become, the real policy rate will soon become non-negative. So I think that we can still expect concern by the RBI on inflation, but I think that it would not be as connected with what the other central banks have done as some people might expect.
Right. Sir, we would also like to ask you about the banking crisis that we've seen now for the last few weeks in the United States and in Europe. US, we've seen the collapse of three major banks, even though the US government, the Fed, the Department of Treasury have all gone in to assure depositors, rescue these banks. What kind of an impact do you expect on the world economy and also on India?
Well, I think that the situation still remains somewhat uncertain. However, there have been very specific circumstances for these three banks. In the case of the Silicon Valley Bank, I guess was the largest in terms of its liabilities and assets, there were some very specific issues. One, that their assets were, it was almost like a narrow narrow bank. That is to say that almost all the investments, all the assets were in US Treasuries, about 85 or 90% or thereabouts. Second, they held them in the held to maturity bucket. And their rules are, as I understand it, that if you hold a proportion of your assets, bonds, treasuries in the held to maturity bucket, then even if you have to then transfer some to the available for sale bucket, and then which you then of course have to mark to market, you then have to in fact mark to market the whole lot. And that's really what happened there, that because of the very heavy changes that have been taking place in Silicon Valley, with many of the Silicon Valley firms facing a downturn, certainly profits coming down, stock market prices coming down, and large layoffs and so on, that they obviously had to be affected. Now, the second feature, that is first feature being the very high proportion of assets in treasuries, the second feature is that they held large wholesale deposits. Now, we seldom have that situation, that we have lots of retail deposits. We don't really have very large wholesale deposits in our country, in India. Because they are large wholesale deposits, and because some people started withdrawing, they had to. The news got out. More people started withdrawing. There was almost a mini run, and so they had to move out the treasuries from the HTM to the available for sale bucket. And as soon as they did that, they had to mark to market. And of course, with the interest rate increases that have been taking place, which you mentioned over the last 1 year, obviously, almost all the treasuries had to be marked down, and that's what made them insolvent, and they had a problem. So it's a very specific situation. Also, the Silicon Valley Bank was highly regionally concentrated, and this illustrates the general problem of that when you have small banks or regional banks which are highly regionally concentrated, they have much higher level of risk. Now, what is very surprising to me is that the regulators and supervisors should have known all this. And it's very strange to me in general for the United States Federal Reserve that with the kind of interest rate increases they have been doing, which they certainly had to do, and also everyone in the market knowing that they would have to do this, and that there would be clear losses in mark-to-market for almost all bonds in the country, that I'm very surprised that they did not keep an eye on banks that have concentration of such bond holdings. And therefore, this was an accident waiting to happen. Now, let me just conclude on this particular issue by saying that the regulators, supervisors, the Federal Reserve and the U.S. government have been very quick in acting and providing a window for large-scale lending to troubled banks. So as of now, the problem seems to have been calmed, even though the bond market seems a little skittish. The yields have gone up. So I think that we're still not out of the woods, but one would hope and expect that the treasuries and the US Fed actions will calm the markets and that we won't have a contagion. Now, incidentally, in that context, earlier there was news that the United States would cover all deposits, even greater than $250,000 that the FDIC insures. But there has been some backtracking from the US Treasury sector. So some of this, I think, issue is still playing out.
Okay. Sir, I'd also like to ask you about how India should see this situation. The finance minister will be holding a review meeting with all public sector banks and lenders tomorrow. This is a regular review, a routine review that takes place. But how should India be reacting to what's happening in the US right now, in Europe? Anything that you expect the RBI to do to ring fence the Indian customer, the average Indian?
Well, first, we obviously have very, very little exposure to the Silicon Valley Bank, except it seems some people in the IT sector, in the technology sector, who may have some deposits and so on. So there's very little exposure of the Indian market, of the Indian financial sector, to the Silicon Valley Bank. There is greater exposure to Credit Suisse. That, of course, has been taken over with the Swiss government help by the UBS. And it's a very small proportion of the Indian banking market. So I don't see that much of an impact on the Indian market. But obviously, we need to be watching this very, very carefully. According to the reports that I have seen, the Credit Suisse has around 20,000 crores or so in assets in India, and about 60% is funded from borrowings. But it's very small. This exposure is very small in the context of the size of the Indian banking market. So now one other technicality is that the Credit Suisse, of course, has a license as a foreign bank from the Reserve Bank. Now, with the UBS takeover, the Reserve Bank will have to give a new license to UBS to take over the Credit Suisse operations here. And I don't know how fast they will do that, what the implications are, and so on. The second thing I would say on this issue, in terms of Indian banking, that despite the problems that we have faced over the last decade or so, since the early 2010s, that as we all know, a lot of repair has been done. Almost all Indian major commercial banks, public sector and private sector, are now well capitalized. And so even through the COVID crisis, we haven't seen much of a problem. So I don't think that there would be a significant issue. One thing I should mention is that my recollection is that I understand that in our situation, we do not allow HTM to be more than 25% of net demand and time liabilities. And so I don't see that much of a problem either, in terms of the banks suffering large mark-to-market losses, because we don't have the kind of concentration of assets in treasuries like the SVB did. So, well, I wouldn't say, look, there's no issue.
Right.
I would, of course, also remind ourselves that even in the 2008-9 North Atlantic financial crisis, and I always call it North Atlantic because, to my understanding, no financial institutions went down in all of Asia, South Asia, Africa, or Latin America during that period. And we certainly didn't have any bank going down. Yes, of course, there was large economic impact, global economic impact. And so I would expect the same thing now. And this hopefully is a much smaller crisis in the financial sector. Finally, obviously the Reserve Bank and the other regulators will need to ramp up their supervision. The contingency, they should have contingency plans should anything happen. But I think, yes, of course, they will have to be much more careful in observing what is going on.
All right, we've run out of time, but Mr. Rakesh Mohan, thank you very much for joining us here on CNBC TV18, giving us your view on the Fed rate hike and also the stress in the banking sector that we're seeing in the United States and Credit Suisse in the European Union. That's all we have time for on this segment of Newscenter, but don't go anywhere. On the other side, Lok Sabha Speaker has disqualified Rahul Gandhi as a member of the lower house following his conviction in a 2019 criminal defamation case. A discussion when we are back.